Trinidad and Tobago, and welcome to the Bourse Report. Well, today we're taking a look at two stocks which give investors direct or primarily direct exposure to the energy sector in Trinidad and energy landscape in Trinidad and Tobago. We're talking, of course, about NGL as well as National Enterprises Limited, or NEL. Now, both groups would have reported fairly positive results for their most recently concluded fiscal periods, in the case of NGL for their full year of 2025, as well as for NEL for their half year of 2026. Let's take a look at what those groups would have reported and what investors might expect in the coming months ahead. Turning firstly to NGL, and for that fiscal period of 2025, the group would have reported an earnings per share figure of $1.45, which was a commendable swing from a loss a loss per share of 77 cents in that prior comparable period of fiscal 2024. Now, share of profits from its joint venture would have improved by just about 27% from 67 million to just about 84.6 million overall, and with profits after tax ultimately increasing that 287% from a loss of swinging from a loss to a profit, rather, from a loss of 119 million in that fiscal 24 period to a profit of 224 million in the most recently concluded fiscal 2025. Now, driving some of that performance would have been, for that fiscal 2025 period, a modest decline overall in product prices, particularly in butane, propane, and natural gasoline. However, looking forward into the year-to-date performance of these product prices, we would have seen that there would have been some material improvement in product prices overall, with propane, for example, increasing roughly 8% from 75 cents to 81 cents, butane increasing 18% from 91 cents to just about $1.08 per gallon in that reddish column, and natural gasoline prices improving a whopping 30% on a year-to-date basis, from an average price of $1.32 per gallon to just about $1.73 per gallon. Again, making for better reading in fiscal 2026. When we take a look at the production and export front, over that fiscal period of January to November 2025, for which we have the latest available data provided, exports would have increased roughly 20% from 4.5 million barrels to just about 5.4 million barrels. Of course, the major, or rather on an adjusted earnings per share basis, looking at that share of profit from the JV, or the joint venture company, which is its sole investee company, PPGPL, or Phoenix Park Gas Processors Limited, we would have seen that improvement in operating performance on an earnings per share basis from 42 cents per share to 52 cents per share. Again, this is cooperating and excludes the impact of impairment charges on the overall profitability or reported profits of NGL, as well as an improvement in the share price from $4.77 at the close of fiscal 2024 to its most current share price of just about $9.87 per share. Of course, the big news for investors is not so much the underlying operating performance, but rather the resumption after a very prolonged period of almost 3 years of dividends by NGL, which would have contributed significantly to its downward slide over the past several years. And in the fiscal 2026, the group would have declared and subsequently paid in May a special dividend to investors of $1 per share. So significant change in the fortunes for NGL there, with that special dividend after just about 3 years of neither interim nor final dividends for NGL investors. And what would have added some icing on that cake in terms of the dividend would be the recently introduced option for investors to receive this dividend in US dollars, which would have certainly catalyzed the stock price, which would have appreciated just about 273% on a year-to-date basis. And that can be reflected, that has been reflected in the stock price, of course, closing at $9.87 as of Friday, and taking that market to book, or price to book value, or ratio rather, from 0.7 times at the end of fiscal 2024 to the current level of 1.2 times, with a book value of $8.10 per share, again, with that share price trading just under the $10 mark for the time being. So at a price of $9.87, NGL is offering or is trading at a price to earnings ratio of 6.8 times and offering investors a fairly juicy dividend yield of 10.1%. Now, investors should take that with a grain of salt, because as the special dividend has already been paid and focus goes to operating earnings and operating capability in terms of paying dividends, we expect that absolute dividend to moderate a bit. However, with those positive operating results, higher profits from underlying asset, PPGPL, generally stronger global energy commodity prices for the time being, particularly with developments or ongoing developments in the Middle East area and energy markets at the global level, and the dividend resumption with a USD option, Bourse is maintaining a very market weight rating on NGL for the time being with a positive outlook. Turning very quickly to National Enterprises Limited, well, for its fiscal period ended March 2026, or fiscal 6-month period rather, the group would have reported an earnings per share figure of 40 cents per share, swinging from a loss of 51 cents per share in that prior comparable period of fiscal 2025. The dividend income would have improved 14% from its investee companies, from 45.8 million to just about 52.2 million. Operating income overall increasing 3.5% from 50 to 52.6 million, with that comprehensive income ultimately swinging from a loss of 187.5 million to a profit of 237.9 odd million. Again, the major driver in terms of that paper loss swing into a paper profit would have been that change in the fair value of assets. Again, this is a non-cash item which is reflected in the profit and loss statement. Now, production numbers aside, which seem to be a bit dated, and pricing numbers aside as well, we can see that on a forward-looking basis, or most recent basis, we can see that the energy commodity price index, which tracks the prices that producers on average receive in terms of a weighted basket in the Trinidad and Tobago landscape, would have significantly increased on a year-to-date basis, growing from a level of just about 94.6 on the index number to about 161 as at the end of April. So more than a 60% increase in average prices received, and that would certainly be factored in to the performance and expectations of investors in terms of NEL investors and the wider energy landscape as well, NGL being factored inside there, and that would have led to a roughly 173% increase in the share price of NEL on a year-to-date basis. Again, that has been, like NGL, that has been factored or reflected in that price-to-book ratio for NEL, which was languishing at around 0.6 times at the half-year period of fiscal 2025. That has now grown to just about 1.1 times, with the book value of NEL at the most current reporting period averaging around $4.63, with the share price trading at just about $5.26. So at that price, NEL is trading at a price-to-earnings ratio of 7.1 times, which is below the sector average of 11.8 times, and offers investors a dividend yield of 5.5%, which is above their sector average of 4.3%. So with higher investee dividend income reported and anticipated in the coming months on the basis of higher global energy prices, however, keeping in mind a somewhat uncertain near-term energy outlook with modest expectations, or more than modest expectations, for improvement on the energy production outlook at the domestic level, Bourse is maintaining its market weight rating on NEL for the time being, with a positive outlook at this particular point. So that's it for this week's edition. For more information, you can give us a call at 226-8773, email us at info@boursefinancial.com, and of course, you can check out all of our research absolutely free on our website, bourseinvestment.com, and you can catch this article in today's business section of the Trinidad and Tobago Guardian newspapers. So until next time, stay safe, happy investing, and we'll see you again on the Bourse Report.